You've reinstated guidance. You've resumed share buybacks. You're planning on paying a modest dividend starting in the second half of this year. We're seeing the balance sheet strengthen as well. How much of this is the beginnings of the fruits of the restructuring that you've put in place in the last 2 years finally materializing versus the recovery we're seeing in some of these key markets like aviation?
I think the journey over the last couple of years has been quite momentous for the company. Clearly, the separation into a pure play aerospace company and a pure play aluminum rolling mill company has paid dividends, plus the repositioning of the balance sheet and the fundamental improvement in performance and cash flow all have led to the current healthy outcomes for the company.
Yeah, I mean, we heard from Honeywell's CEO earlier this week about the recovery that company is seeing right now, not only on the domestic side where air travel is concerned, but also internationally and the expectations there. As we do see 737 MAX orders, for example, begin to rebound right now. I mean, today we have reports that United is poised to purchase upwards of 100. I know you're a supplier on that aircraft, among others. How is that trickling down to Howmet right now?
Let me start with the leading indicators, whether it's searches for flights, ticket prices, flight takeoffs and landings. Everything that we see, certainly for domestic travel, leads us to believe that the next few years are going to be very healthy for aerospace. If you assume that international flights begin to recover starting this summer, and then supplement the narrow body growth with wide body growth in a year or so's time, then I think we're set for 3 very healthy years of outsized growth in the aerospace industry. And then maybe by the mid-decade, reverting to the more norm of a 4 or 5% growth. So healthy times indeed.
Yeah. What are your expectations on the defense side? Since I know you also contribute parts and components to things like the F-35 strike fighter. How much did that help, I guess, buoy the company last year in the midst of COVID? And what are your expectations for growth in that part of the portfolio?
The health in defense clearly helped us. Our defense sales were up double digits last year. Also, our industrial markets in industrial gas turbines were also very healthy. For us, the solidity of that defense business, which is about a quarter of our sales, was quite important to us during the last year. We see it remaining steady and growing. It grew again in the first quarter of this year. And then when we look forward, say, just at the F-35, it's about 40% of our defense sales. Then we note that Lockheed planned to build more aircraft in 2022 and 2023, more than in the last couple of years. So that's good for us. And also, clearly, with the fleet of F-35s that will be installed around the world, then the spares market for that aircraft, for our engine parts, is going to be really important as we get to the middle of the decade.
Inflation in focus again today, given that very hot reading that we got, consumer price index reading that we got for the month of May. Commodities have been a key piece of this, including aluminum, which has gained double digits this year. What have you seen? What are you experiencing in terms of those raw material costs, and how much of that are you able to turn around and price out in your end markets? Okay.
Nickel alloys are the probably most important commodity that we purchase, combined with then supplemental, I'll say, things that go into super nickel alloys like cobalt and rhenium. We also do buy aluminum. That's the smallest of our raw material buys. We've experienced very significant inflation in each of those commodities over the last few months. We're in the position where essentially we pass those costs through to our customers by way of agreements of escalators. Most of those escalators being dealt with inside the quarter that is relevant to them. We're about 95% covered in terms of all input material inflation. So then that's a good condition for us in these inflationary times.
Shepard Smith here. Thanks for watching CNBC on YouTube.